So today we have Evan Collart with PEO Advisors. So excited to have him as my special guest today. I'm going to let him just introduce himself to you today.
Thanks, Suzanna, for having me, first and foremost.
Absolutely.
Yeah, my name's Evan Collart, PEO Advisors. We're out of Tampa Bay, Florida. I've been doing the business about 20 years. I had the old agency since 2010 and a true advocate for the business. I really enjoy it. I love it. I love helping people. And certainly watching businesses thrive has become a passion for me. So
Excellent. Why don't we dive into some of those businesses that you've helped thrive? Let's talk about it. So let's talk about some scenarios where you've actually helped your client.
yeah, I think there's a lot of ways to sell PEOs, right? You can angle it through the benefit side. You can angle it through the comp side, certainly the payroll side. PEO Advisors has found a lot of success, more or less acting as a distress comp specialist. We don't really write a ton on the benefit side, although, of course, the products that we offer, it's there. But our niche has really been to partner with insurance agents kind of all over the country and advertise ourselves as a way to come in and alleviate the high price of workers' comp, essentially. Yeah,
so the brokers are basically giving you their problem child.
Yeah, for a lot of reasons, it's a one-off business, right? For whether that's a gap in coverage or high mod or frequency, severity on claims, or even a startup. Just certain industries are frowned upon as a startup. So it's really a mixed bag. But sure, if it's got a perfect track record and great premium, I almost equate it to lending, right? If you have an 800 credit score, you can get a loan anywhere, right? If you have a great experience mod and a perfect history, a lot of doors are open for you for workers' comp. But if you have some blemishes, as in claims, et cetera, that box will narrow. So we have really embraced that one-off business model at PEO Advisors, come in and do some justice for these businesses. So it's worked for us.
Let's talk about maybe some startup industries that it's just hard to get workers' comp for.
In Florida and certainly the Southeast US, roofing, tree trimming, towing operations with the 24-hour road exposure, repoing. I think there's just a little bit of a connotation with that. Towing, whether it's a plane, a boat, a car off of someone's lot. A lot of carriers really just don't want to touch that stuff. And recently we've seen a little trend with home health care. Obviously, with Florida being the retirement state that it is, there's tons of assisted living facilities, retirement homes, things like that. And they're super prone to back injury. It's a real low premium code. And of course, if you're a healthcare worker and someone falls, your natural reaction is to swoop down, pick them up. And then that's when a back injury can occur. And so that box has seemed to narrow in the recent years as the rates have gone down. Florida's been on a kind of a wild tear of 8 out of the last 9 years, the workers' comp rates have reduced. And
really?
So the business owner champions the fact that, oh my gosh, my rates and my premiums are at all-time lows. This is awesome. But not understanding that due to that, the box is getting tougher to fill, right? Carriers are leaving the state and or saying no to more and more industries because the premium's just so low, it doesn't outweigh that kind of risk versus reward scenario. And I know it's hard to talk about you on a profitable carrier, but like anything, you do need that carrier to be healthy. And so everything is a risk versus reward ratio, how much premium versus how much risk.
Right.
And so as these premiums continue to go down, it's very easy to get upside down on your premiums. The average broken arm is 20-something thousand, right? The average ambulance ride is 10,000. If you only have a $4,000 premium, it's just very simple. One claim and you're upside down in most cases. Peppered in with a couple of years ago, Florida had released, they had an attorney cap where the attorneys could only be billing so much on workers' comp injuries. And they had an indemnity benefit, which that's the wage reimbursement portion of these claims, capped at 2 years. They lifted the attorney cap and they extended the indemnity benefits from 2 years to 5 years. And so naturally, healthcare costs more, medical costs more. Now the attorney bills are costing more. Now the indemnity benefits are going further. And the rates are going down. Those are going up and the rates are going down. And it's that sweet sauce to really create a hard market here.
Florida has been the mecca of PEOs. Everybody knows that. And like you said, that there's PEOs that just focus on workers' comp and those that focus on healthcare. Talk to me about how you got into the niche that you got into out there in Florida.
Yeah, it's funny. Believe it or not, I was actually a mortgage broker. And I think that's why I always do that example to lending to insurance, because it's really my two biggest backgrounds as an adult. I fell into the PEO business at just 20 years old. And I was on a dart league, believe it or not. And there was a gentleman that was on our dart league that was in the business. And I seen him doing very well at the time. And I made that pivot when the refi boom ended in the mortgage world and things were starting to collapse. Moved over to the PEO business. And the model that we operate under today largely was just the way that my mentor had done it. And watching him and seeing him literally open his inbox every morning to Accord apps from insurance agents saying, help, help, just seemed like an easy way to scale any business. And so like anything, when you go out on your own, you take the best ofs. I like what he did. I like what they do. And really incorporated that all into one. And my partner, Eric Chekarelis, and I, like I said, co-founded PEO Advisors in 2010. And we're still always learning, right? I've learned a few things. You came onto our radio show a few months back. You taught me a couple of tricks. We're always ever evolving in this business, like anyone should. But we went on speed here, right? I think that at the end of the day, these insurance agents want to place accounts in the standard market. That's their job as an insurance agent. But they're constantly getting back down to these deadlines where you're going to lose coverage in 72 hours. And then you finally get that last declination from your last carrier that you were holding out hope for. And oh my gosh, now what do I do? I can pivot to the state fund, or I can go to employee leasing and join a PEO. And so we've really had to embrace that fire sale model and be able to turn these accounts quickly. So we do all our own underwriting in-house, right? Anything that the PEO would do from an underwriting standpoint, if we sent them the file, we literally do here on the front end and send them a fully underwritten file.
Wow.
So from the snapshot of SunBiz to pulling the coverage history to the claim review, we take that a little further. Any comp claim that's over $25,000 in value, we'll do a narrative, a couple paragraphs on what happened, a paragraph or two on how they're trying to prevent that claim from happening again. We really try and take it to that extra length so that when we give that PEO the file, there's really no stone unturned any longer, and it's just simple yes or no.
Okay. So how have you been so successful of getting these brokers to partner with you? Are they automatically quoting you as part of the process with all their other standard carriers as well?
So we hope. We want to, we really advertise ourselves in that same sense. We're trying to take that angst of a PEO off the plate, and it's nothing more than another comp solution, right? I've got nothing, but here's our next best avenue to go with. Now, luckily in Florida and most of the states in the Southeast US, the state pool is an option of last resort. For example, California, the state pool is actually the most lucrative option. It's the most competitive option. But most of the Southeast US, if you end up in the state pool, it's going to be at a heavy increase surcharge to your rate. It becomes very easy to say, listen, I don't have anything in the standard market for you, but this PEO option can save you thousands from the alternative. Okay. And a lot of these businesses, believe it or not, they're outsourcing their payroll anyways. Even if they do have a standard comp policy, they're using some form of a third-party payroll provider, an ADP or a Paychex or a Prime Pay, or there's hundreds of them. And so, we're really just trying to say by putting those two services, your coverage and your payroll under one roof, we can get some discounts for you. Is it worth it to? It becomes a very simple value proposition. But yes, when we're starting that process with these agents, we're literally saying, let us be another feather in your cap, treat us just like another carrier. And you can submit it to us at the same time as submitting it to the carriers. If you place it in standard market, great. No feelings hurt, no love lost here. We understand that's what your goal is. But the more time you give us to have a prepared option, the better. Right. Even though we've embraced that fire sale model of 72 hours or less, certainly the ones that we've been working with for an extended period of time have just become accustomed to the minute they get it, they send it to us. Knowing they're going to the standard market, they still allow us to do our process as well.
Yeah, that's similar to how I used to work with a lot of health insurance brokers. Just have us as another tool in your toolbox and just have us part of the quoting process. And I used to always tell them, if you're not talking to your clients about PEO, I guarantee you somebody else is. They're knocking on their door and talking to your clients about PEO. And so sometimes a lot of brokers, they just think of a PEO as a competitor just stealing their business. So how do you ensure your brokers that you're the PEO is going to be a partner with you, not a competitor?
Good question, right? Because it does come up a lot, especially when you're trying to mature that relationship in the beginning. With all of our business virtually coming from agents, the pitch is very simple. We keep your other lines safe in this process, first of all, right? We don't write general liability. We don't write commercial auto. We don't want to do the health insurance unless you ask us to through the PEO. but it's the exact opposite of that. By placing the business with us, just that single market, of course, if the insured asks, hey, do you write these other lines? It's going to be our job just to bounce it right back to you. Okay. Another nice thing is these agents, the AORs, right? That agent of record or the BOR, broker of record. In the standard market, another agent can swoop in and just simply sign these forms and take control of all the other policies. And so if you can't write the workers' comp form and you let that business owner go to the stand, find another agent that can, all your other lines are susceptible to agent of record letters after the fact. So it's a two-pronged thing. And like I say, ultimately, you're pitching this as the next best alternative. And so there's really no easy way to do it. Of course, in the beginning, some agents want to be on that call with you. Some of them want to deliver it themselves. It's all of the above, really. But after a few exchanges and they see what we can do, quickly, they'll step aside in most cases.
So let me ask you this, because I don't know if this is a misconception. Oftentimes, if a company has a very high mod, they join a PEO to clean up that mod. After a few years, does the broker recommend that they go to the standard market?
Most of them don't. The reality is the compensation package through us is oftentimes higher than if they placed it themselves, right? Okay. We get a combination of the workers' comp premium, the administration fee revenues, okay, and in some cases even markups in other buckets, but those combined, and then what we ultimately point to the agent is usually well above the industry standard if they wrote the policy themselves. So
once they go PEO, they typically stay PEO.
Yeah, literally our rollout is less than 10%.
Okay.
Now, of course, there's an attrition rate to the business, right?
Right.
Whether the business sells,
gets sold,
out of business, kind of all of the above. But it's a rare day where that agent says, okay, it's been 3 years, their losses are cleaned up, I'm going to roll them back out. There's always a couple that do, but what they have found a lot of times, no matter how the business owner ends up in the PEO, whether because they had to, kicking and screaming, they didn't want to switch their payroll, whatever it is, but they ended up doing it because they had to. Very few later are not happy and roll back out. They recognize the ease of what it takes off of their plate, the limited liability shift of having the PEO to do it. And most importantly, the claims management. You know, if they've had a claim in the standard market and had to lawyer up and really go down that path, and then they have a claim in the PEO market where all they do is fill out a simple first report of injury form, and then the PEO handles everything from there, including the attorney representation and in mediation, litigation, all the above. That feel is far different. And if it's a claim-prone business, they oftentimes recognize how much easier it is to battle those claims in the PEO.
Excellent. So what about as far as like the administration and the pay as you go, as far as payroll and not having to eliminate the audit at the end of the year? Do they see the value of being in the PEO in that aspect?
Yeah, absolutely. We probably inherit 2 to 3 cases a month that are literally weathering a nasty audit, and their agent just threw out that line, hey, we have a model where it's audit free. Plenty hook, line, and sink on that. It comes down to the responsibility of the business owner, right? And although there's plenty of business owners out there and entrepreneurs out there, and I don't mean this any sort of way, but whether they married into it or a relative passed away and they took it over, there's plenty of business owners out there that they know their craft well, but they're not necessarily good bookkeepers. They're not necessarily auditors. And so the model that takes all of this off their plate in one fell swoop goes over well. Our niche is blue collar, so they really embrace that. Of course, when you get into these larger businesses that have full-blown human resource divisions and management teams, some of them may say, hey, I don't need all of that. But the reality is there's plenty. We just took on a $36 million payroll, 1,000 employee, 9 state, and they didn't know all the compliance in every state. And they actually embraced that limited liability shift that comes with the PEO in a big way.
What kind of industry was it?
Yeah, so actually I wanted to talk about this case, so it's a good intro into it, but essentially they have contracts with Enterprise Rent-A-Car.
Okay.
And so when someone brings back the rental car after they used it, they're at a bunch of major airports, West Point, West Palm, Fort Lauderdale, Dallas, Atlanta, and they're picking up Seattle and one other on the West Coast. But essentially it gets brought back to Enterprise, will come drop it off at their lot. Then they detail the car and bring it back. Okay. This account, and granted, there's about 1,000 employees. So if you scale it, claims verse, but they had 51 claims in Q1 this year, and 32 of which went to litigation. And so
Wow.
carriers were just getting off of it left and right. And it seems like a very low risk industry.
I know they're just
selling
cleaning
these
cars.
right?
Yeah.
And they
Seems
actually
low
drive
risk.
it through an
It's-
automatic car wash to
Yeah.
start. So some of that could have been fraud.
Yeah.
It can be rampant, but nonetheless, so we approach this with the PEO, although they're having a frequency issue, they're having a lot of claims. Most of them are at a value of $2,500 or less. It's just little frivolous things. So we incorporated a deductible of $2,500 on the account. And then after looking at those 51 claims, almost 40 of them didn't exceed that deductible amount. It became very attractive for the PEO at that point.
So did you
It
put
seemed to work
anything in,
out.
did you guys help put anything in place to help with those fraudulent claims going
Yeah,
forward?
the first thing not necessarily the fraudulent, but the first thing we said, you've got to be doing better on training. You've got to get risk managers at these locations, and you've got to incorporate someone that is just simply overseeing the day-to-day operations, not washing the cars, not necessarily in a management level, but a risk review scenario, right? Because if it is fraudulent and you have eyes on these guys at all times, he'll be able to kind of weed that out a little bit. It's hard to say if you watch their action. Clearly, you didn't get hurt to that capacity. Q2 and 3 performed a lot better, or going into our next quarter, I should say. Knock on wood. It's been a good little case so far.
Congratulations on that. That's a
Well,
big
thank you. Yeah.
win.
Yeah, 20 years in, that's definitely a top 5 account for us.
Yeah, that's typically pretty big for a PEO win. That kind of reminds me of a company that I recently talked with. They do Amazon deliveries, and they don't work for Amazon directly. They're just independent owners of these trucks. And the drivers think that they work for Amazon. And so there's just all these claims because they think they're just filing against Amazon. And they put in cameras in place to they're out on their own, just driving, delivering Amazon boxes. It's really hard to monitor that. But one of the owners said, this guy came to my Christmas party. And I'm like, why kicked you out of the Christmas party? Because you just filed a claim on me. And the guy said, I thought I was filing a claim on Amazon, not you.
Yeah. Yeah, it's tough, right? When you're giving right direction and control, you're putting them in an Amazon painted truck, right, to really understand those layers. And so you mentioned mod earlier, another unique case that we recently had. And that's a really awesome thing about the PEO is when you join the PEO, you take on their mod.
Right.
Okay. And we had a gentleman that was trying to get on the Anheuser-Busch plan out in Nebraska. And his modifier had to be under 1.0 essentially. And he was coming in at a 111. And so for anyone that on this, I'm sure most folks watching this show would understand the mod, but that's more or less your credit score for insurance. That's what we call it here at PEO Advisors. And it sticks with you for up to 3 years history. And having a good history with good premium, low claims, your modifier will creep under a 1.0 multiplier. And vice versa. If you've had a ton of claims that exceed your premium over 3 years, then it'll climb to above a 1.0, a 110, 111. A 111 would be like a 11% surcharge to your rates. And in reverse, if it went under 1.0, 0.9, that would be like a 10% discount to your rates. So a lot of businesses, before having contractors come on the site, want to see that mod under 1.0 or equal to. So luckily, we put them in a PEO. We were able to use the PEO's mod, got them on the plant. This was about 6 months ago we wrote it.
Uh-huh.
And
what mod were you able to bring them down to?
The PEO's mod was 0.89.
Okay.
So,
it helps them be more
PEOs
competitive. It helps them be more competitive on bids.
It is. And although it's a competitive blue collar mod, right? Most of the PEOs we're working with are heavy blue collar. So anything under a 1.0, I would say is good.
It's fantastic. I would say
especially
so
if
as
you're
well.
doing roofers and framers and tree trimmers and really writing the heavy blue collar stuff. We have
What
a couple. Go ahead.
What about the misconception? You hear that sometimes people just feel like they don't want to join a PEO because they lose. If they have a good mod, they lose their good mod.
Yeah. So this goes 2 ways. Okay. The reality is I have heard that a couple of times. You can request the PEO to continue to report to NCCI on your behalf. Okay. It's an extra step that they have to do. And certainly they're only going to do it upon request.
Right.
But to continue
they might
to
charge you
promulgate
for
your
it.
own
Yeah.
mod. Yeah. It's out there. Usually it's more about the control, right? There's a misconception that I'm going to lose control of my staff, the process of hiring and firing by taking on the PEO because they're the PEO's employees. And that's probably the biggest myth out there, right?
Right.
The paperwork says they have the ability to fire, but that's only because if a business owner can't make a sound decision in a breach scenario, they've got to hold that ultimate veto card. But in my 20 plus years, I've only seen that exercised one time. I really have. And it was a gentleman fell off a roof. failed his urine analysis for multiple substances. Fortunately, the gentleman that fell was the employer's best employee and his brother.
Oh,
And so there was that intimate
no.
relationship there, and he
Mhm.
did not want to let go of the employee. But you're at
Mhm.
a point where you're endangering others. You're
Right.
on the job site intoxicated. You've got to make that formal step of letting that person go. But
So did the
they
PEO do it?
PEO had to enforce it. But like I
Yeah.
say, we have about 1,000 businesses in our book. We write about 250 cases a year. But going back over 20 years to only seeing that exercised once, it shows you how little the PEO really does interfere with this model. In fact, they want you hiring good employees. They want you to train them. They want you to take those steps because it just creates a safe environment, keeps your claims down, keeps your rates down.
Mhm.
And in fact, they'll even come out and help you. If you needed that analysis, they'll come out and show you, are you OSHA compliant? Where are you lacking? They'll have someone from the carrier come out and do a risk analysis. And in fact, that's almost become standard practice, at least for the blue collar industries, where within 90 days of sign up, the carrier will come out and do a site visit, do a walkthrough, make sure you're doing what you're coded for, et cetera, from an operations standpoint. And we really tee that up as here's that moment. If you're not sure, or you want a third party look, or you want to be able to enforce some things with the employees, you can say it came from the risk review specialist. So it's really all about how you tee it up.
And these risk review specialists, are they typically employees of the PEO or are they employees of the actual insurance carrier?
Both.
Okay.
So the larger the PEO is, the more likely they'll have someone in this
Mhm.
actually mitigating risk and evaluating risk. There are some small to mid-cap PEOs that literally don't have this position in their staff yet. So there's over 450 PEOs in the country. I think that was the last number I saw. It used to be in the thousands, but the pandemic
Yeah, it was like
whittled that down a little
900,
bit.
over 900 for a long time.
Yeah. When I got in the business back in 2002, there was 2,700.
Wow.
Yeah, it just shows you PEOs are like anything else. They're businesses. They have to be run the right way to stay healthy, profitable, et cetera. And so when they start to underperform, you either liquidate, you sell it off, all of the above. There were so many PEOs that relied on the franchise model, hospitality and franchise model that, and I understand that the franchise institutes minimum standards. It really gives you that blueprint of how to follow protocol as a business owner. But the franchises were so late to get back open. They were the last to really open their doors in the pandemic. PEOs that were heavy in that model ultimately suffered the most.
Yeah.
But out of the 450 that are out there, give or take, there's a reason why we've picked the 18 to 20 that we work with. We like to think they do the best job on both coverage and service. And certainly there's some of the larger ones.
Mm-hmm.
We have some mid-cap PEOs, don't get me wrong, but we focus on the larger ones because I want to put something in front of these business owners that we know is stable and will be there for a long time for them.
Okay. What are some really good industries that we should be going after here? That we should be talking to, that I should be talking to?
Yeah, I guess that's preference, right? I think that question's a loaded question in the sense that it really depends on the PEOs you've partnered with.
Okay.
Right? Just like an insurance agent is only as good as the carriers they have. In a lot of ways, so is the PEO broker. And that's why when I started this call today, there's a lot of ways to sell this business. I think a week or two before we had you on the radio show, we had Blanca Abud on, the PEO lady out of Texas. And I respect her greatly. She's been in the business 13 years. She's a complete aficionado in all aspects. She knows the business amazingly. But our model is so different. She goes business to business. I go through agents. She sells benefits first, comp second, where I'm so heavy comp only. For example, in the 20 years I've been doing it, I've only written 2 group health plans at the time of sign up. In most cases, if the business owner has it, it has it from the agent that gave it to us, right? And so the last thing we want to do is go pluck that line away from them. So we administer deductions and take over deductions all the time. But as far as originating the health plan at sign up. So for me, the tougher industries to write is certainly the roofing, the tree trimming. There's very little home water exposure, USLNH, United States Shore and Harbor exposures.
What about restoration
They've become
companies?
such a narrow box. I think everyone always gravitated to those because they were the higher premiums. And so the higher the premium, the higher the profit in that model. But it's literally gotten to the point where instead of having 20 homes to write it, we only have 3 or 4. And a lot of times when we get the account, they're already with one of those 3 or 4. It's such a narrow box. But to this day, one of my favorite industries is towing. I think it's almost recession proof. The reality is cars are always going to break down. Cars are always going to need to be towed. Cars are always going to need to be worked on. A lot of these towing operations have a mechanics division, and they're always working all through the night, right?
Right.
They
24
never
hours.
are lacking hours.
Yeah.
So that's been one of my favorite industry over the years. I've liked construction, but that can be spotty, and you can have a housing market collapse like we did in 08 in Florida. So that can change the game a little bit.
That was everywhere, not just Florida. When you talk about construction companies and towing companies, in my experience, a lot of our Latino owned businesses, and they're used to flying under the radar and just paying contractors and not paying W-2s and not, being up on board. What do you got to say to that?
I don't know if you heard about the Senate bill that's passed in Florida come July 1st, where
I did hear about it. So talk to us about that.
Yeah, it's going to be a game changer, right? So what I'm hearing, of course, there's a little bit of separation between church and state, and I'm certainly not going down the political path here, but the federal government's allowing them in at a rapid rate and kind of one state at a time. And I was having to fight these off, fighting the illegal workforce, right? It's gone so much further than just having the dishwasher at the restaurant now. It's almost becoming the prevalent labor force.
Right.
All right. Now, Florida had a really unique circumstance the last couple of months where they actually had a sheriff get killed on a job site from an illegal operator who was using a backhoe and unfortunately ran into the sheriff. And I think that was the start of really heightening this alert here. And so Florida's always been an E-Verify state, but it just hasn't been enforced. And so now they're actually enforcing it where you have to do E-Verify them. And if they're not legal, you can't have them on the job. And if they do a walk up to the project and you're using a legal force, you get shut down and the fine starts at $5,000 and up. So a lot of nervous people in Florida. Heavy penalties. Yeah. This is the first real strive to making a difference for a legal workforce in Florida in my 20 years of selling the service. In the past, it would be as simple as this. If someone got hurt and then their social security number came back invalid, the PEO would send a certified letter to the business owner and a certified letter to the employee, and they would have 7 days to come up with the correct information. And at that point, if they couldn't produce the correct information, the claim would just get a denial. Medical bills would still usually be covered, but of course, the wage reimbursement portion would stop because if they're not here properly, they can't have FICA taxes taken out of their check. They're not approved for it, right? And so that becomes, it's really just a slap on the wrist, though. This is the first time where they're actually making the business owner take an active interest. You can't just say, I didn't know. You have to be running the information now.
All right.
So it feels like this could be the great American comeback in a lot of ways. Okay. For the first time now, these folks are really going to have to pay a real wage, go back to offering benefits, 401k, to really entice these workers to come back. The job sites have slowed down here in a big way, like the Hurricane Ian project in Fort Myers. Although they are halfway through that, there's still a lot of work to be done down there. And the job sites are very quiet, decimated.
Wow.
So even though it's not 7-1 yet, they started driving around to the sites and informing the business owners and putting the word out. And just that alone was enough.
Wow.
And so they've really had a big reaction in the market here. So
well, let's see if some other states follow that.
Yeah, I think it's just a boiled down between red or blue. Now, going to Texas, for example, right? I've got to assume this is a big problem in Texas, but Texas is not a mandated workers' comp state. And that's probably a big reason why Blanca Boot sells benefit first, right? She has to value add that benefits. And then, oh, by the way, you should be putting comp on it. It's beyond me in 2023 how we could have a state that actually doesn't mandate workers' comp. You're putting so much trust in the business owner that if they were to have an injury, they have the financial resources to self-fund that claim. That doesn't seem practical to me. Certainly not in heavy blue collar industries. We had one claim last year that's multi seven figures. Yeah. Multi seven figures. We had a towing account just last year where I can't remember if it was an ambulance or a garbage truck was off in a ditch and they had to winch it out to the road to be able to tow it. And the employee was on the phone and just got lazy and didn't put the proper chain width on the winch and it snapped and hit his jaw. This is going to be a lifetime payout claim. We're talking multiple 7-figure claim. And so to think that a 7-man carpenter in Texas has the financial means to self-insure something like this just doesn't seem practical. But I would say Florida and Texas are probably the most inundated with illegal labor as starters. And so I would think that more states are going to follow. I really think that is the responsible thing to do,
All
right?
right.
We need the workforce
stay
out
tuned.
there.
Let's see what happens.
Yeah. Yeah. So we've got a
Yeah.
lot of eyes on it, and any adjustments, maybe I can come back and give you an update.
Sounds good. I appreciate your time, Evan. Let's talk about your radio show. You have a radio show in Florida that I was a guest on. So
Yeah,
appreciated
yeah, that
that.
was awesome. We had you out a couple of months ago, right? We just right before we started the Women Empowerment Series in March. But yeah, it's
Right.
called Everything PEO. It's live streamed on Facebook and LinkedIn. It's simulcast on 3 radio stations in the Tampa Bay area on terrestrial radio. And then of course we cut it up into YouTube and shorts and things like that. It's just to get the word out. It really is. PEOs, although they've been around since the 70s, there's still plenty of folks that aren't even familiar with it.
Exactly. They need to be educated.
Absolutely.
Mhm.
Absolutely. I think almost everyone's probably heard of a Paychex or an ADP, and we get lumped in with them as, oh, it's another one of those type of companies.
Right.
There's just such a huge difference between the ASO third-party payroll model and the PEO must-have comp and payroll together model. But we've had a lot of success with it. It's certainly bringing on industry leaders and other PEO owners and funding companies, staffing companies. It's so wide ranging, the resources that business owners need these days. It's just a neat way to get the information out to the masses. We've had a lot of success with it. And although it's just locally on Tampa radio, LinkedIn's everywhere, social media is everywhere. It's really a fun thing about trying to scale business these days through social media, that unlimited Rolodex. But you're doing a great job at it too.
Thank
This show
you.
is,
Thank you. I appreciate it.
another neat way. I
It's
feel
all
like
about, yeah, let's all educate. It's all about just educating people on PEO. It's a huge market out there. So
yeah,
I certainly
really
do
is.
appreciate Evan. It's been awesome. Anything you would like to add before we close out?
No, I just think anyone that ends up with Suzanna and the CEO for the PEOs in good hands, and one show at a time, we'll just keep getting the word out. And I appreciate so
The
much for
word
having
out.
me.
Thank
That's it.
you. Bye.
Best wishes. See